a comprehensive look at trends, fund profiles, and more in Exploring ETFs.
It seems emerging market ETFs are gaining in popularity. We're going to find out exactly why with our ETF research director, Nina Mishra, who's here with me now. So I'm guessing, you'll tell me if I'm right or wrong, a lot of this has to do with the political uncertainty, the policy uncertainty in Washington.
Yes, right. You saw that yesterday, the Dow and the S&P 500, they posted their worst decline in almost 6 months because investors are getting worried whether the best case scenario for all the tax reforms and deregulation and fiscal stimulus has already been priced in.
Yes.
And with the political drama going on, there is some doubt whether Trump will be able to get his economic agenda through. And stocks had risen a lot since elections.
Yep.
So now there are rising concerns about valuations.
Now, the one figure that I know you watch quite a bit, two figures, inflows and outflows to these funds. So does the outflow figure support what's going on here?
Yes. So the latest Bank of America Merrill Lynch survey showed that many asset managers are pulling money out of U.S. stocks and they are putting money elsewhere, including emerging market equities. And that is one of the reasons why emerging market ETFs are up almost 16% this year.
And they feel that it's the growth opportunity that's attracting the
Exactly.
investor?
So economic growth is picking up in many parts of the developing world. You know, China has stabilized. Outflows from China have slowed down. Brazil and Russia, they are emerging out of recession now. And Indian stocks have done really well this year because the government initiated some critical reforms and the ruling party won a major election in one of the largest states in India. And even South Korea, despite all the political turmoil going on, those stocks are doing pretty well this year because investors are hoping that the change in government would probably lead to initiation of some critical reforms in the country. And Taiwan stocks are outperforming mainly because of Apple, because there are so many Apple suppliers in that country. So there are various reasons, but it's mainly because of growth as well as better valuations than the US that investors are looking at emerging markets and emerging market ETFs this year.
All very interesting. You have 3 examples that you're going to share with us of these emerging market ETFs. First one is the Vanguard FTSE Emerging Market ETF,
Yes.
VWO, the ticker.
Yes. So we are talking about 3 broad emerging market ETFs which hold a lot of countries and a lot of stocks. VWO is the most popular ETF in the space with more than 51 billion in assets under management, very cheap with an expense ratio of just 14 basis points. Now the main difference between this ETF and many other, including the 2 we are going to talk about today, the other 2, is that this follows a FTSE index, and FTSE classifies South Korea as a developed country. So that is why they do not include South Korea in the developing market indexes. So this ETF does not include South Korea. China, Taiwan, and India are its top holdings, very well diversified with more than 4,200 holdings.
And for those people who may not know, FTSE is the Financial Times Stock Exchange Index, right?
Yes.
In Great Britain. All right, then you've got the iShares MSCI Emerging Market ETF.
Yes. So as I said, that the main difference is that this does include South Korea, and it is slightly expensive with 72 basis points in expense ratio, but pretty popular with 29 billion in assets under management and more than 843 holdings. For this ETF, top countries are China, South Korea, and Taiwan.
And then finally the iShares Core.
Yes.
MSCI Emerging Markets ETF.
So this is another product from the same sponsor, iShares. The difference is that it is more diversified than EEM. It has 1,895 holdings, including many smaller companies in these emerging market countries. This also is pretty popular with 25 billion in assets under management, mainly because it's cheap. And this also includes South Korea, same top countries breakdowns. China, South Korea, and Taiwan are the top countries for this ETF as well.
All right, and always interesting that you show us all the time is how these all stack up against the S&P 500.
Yes, so as we can see that S&P 500 index is up about 3 to 4% this year so far, whereas the three emerging market ETFs that we talked about are up about 14-15% this year. And we can see that VWO, which does not include South Korea, has very slightly underperformed because, as I mentioned, South Korean stocks have been doing really well this year. But otherwise, these three ETFs are pretty similar. It depends upon what you like, whether you want to invest in South Korea also, then probably one of these ETFs is the way to go.
So everyone's talking about a market correction here, 5 to 6% over the near term. Once that's out of the way, and if the next leg of the up market, the next up leg of the market starts to take hold, might this trend change, or is this going to be in for the long term?
I mean, in general, because these economies are improving, so there is a bullish case for emerging market stocks, but they are very sensitive to and vulnerable to Fed's policies. If Fed stays cautious, like we saw from the recent FOMC minutes, they did not revise the economics projections much, and they talked about 3 rate hikes this year, whereas some analysts in the market were talking about 4 rate hikes. So if the Fed is not very hawkish and the dollar does not go up a lot, then emerging markets should continue to do well.
Okay. Do you own any of these that we talked about?
I don't.
All right. If you want more ETF information on our website, Zacks.com, all you need to do is go over to the home page and use the Funds tab in the top toolbar, and that'll give you the opportunity to hit on the ETF section of the website and get more commentary and ETF rankings, etc. In the meantime, with Nina, I'm Terry Ruffalo.